How are you trading US markets at the moment?
I mean, it's been relatively easy in the U.S. in the sense that everything has been focused purely on U.S. small caps, right? You've got this interesting redistribution of market cap as you've had all this tariff and trade war fears, as money's flown out of anything international, anything out of large cap, anything that's emerging market, and really gone into domestically sensitive, smaller cap stocks. It's actually been very easy to track that momentum. The concern that I have here is I think you have this sort of arrogance of conviction in terms of the way investors are seeing the future. And what I mean by that is I travel the country, I do presentations to CFA chapters. I always like to ask audiences questions just to get a sense of what people are thinking. The question I ask everybody now is, how many of you think that we're entering a secular rising rate environment? And, you know, depending upon the city and state, I get maybe a third of people and maybe half raising their hand. The next question I then ask is, well, how many of you can define how long secular is? And I always get dead quiet in the room. You've got this conviction about this narrative of rising rates, this conviction of this narrative of U.S. only, small caps only, that's the only place to be for the very long run. Maybe that's the case, but when you have so many people believing that story without questioning further whether that narrative will hold true longer term, it makes me put my contrarian signals up.
Yeah, you mentioned domestically sensitive small caps. Where specifically is there a sector amongst those domestic players that stands out to you?
Yeah, I mean, that's what's interesting, I think, about this move. It doesn't seem to be necessarily sector specific. It really is just a pure cap move. Actually, if you look at microcap stocks and microcap indices, those have done even better, which again shows you that this has really been driven on this idea that smaller is more beautiful and better under Trump than large and international. It doesn't mean anything sort of sector specific in terms of what we do. You know, we're doing it based on this rotational strategy. We've tracked that momentum in small caps. We've been in it, done well. But I'll tell you that we're getting kind of close here to what could be, you know, a pretty meaningful defensive risk-off period. We track these quantitative leading indicators of volatility, and it looks to us like you could start seeing a reversion whereby bonds start doing better for the coming months, utilities, defensive dividend plays start doing better, and that might take some of the wind out of the sails, so to speak, of small caps and this narrative that it's U.S. only.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.